This is Damon Stevens with Finwell Builders. Today is Wednesday, September 14th, 2022, and the stock market update for the trades of the day. And boy, we just kind of settled in today. I didn't know if we were going to have a continuation of the downside or maybe a little bit of a retracement, but the market decided to take a little bit of a breather here and rest. Now, if it breathes for several days, most likely going to have some downside here. So we'll see what happens if it sets up a little bear flag, or if we get a little bounce here at some point to retrace back some of this, because the market does like to retrace after pulling back such a far distance here, just to make sure it's retesting the area that it's wanting to go to. So we'll see if that happens. But also today, man, we have HKD came back into the casino today. Not recommending trading this one. It definitely is a gamble, but thought it was interesting to see. So we'll take a look at that one as we're getting in here, as it did hit the scanner today. All right, so let's look at the market here. So Dow Jones closed up 0.1%, pretty well flat. NASDAQ up 0.74%, and S&P 500 up 0.34%. You see the chop here today. But, this creates, if you think about this as a range, you could short on the open. You could, take profit here, get back in, ride this back in. And by the way, this is great candle for a reversal candle. And then you could, short it again. And so you can kind of play this market still if you're saying, hey, the market's flat, there's no opportunities. There is really market opportunities, but it's called range trading. We teach it in our courses, but range trading is a great way to make money if the market decides to ever just be flat. But definitely need some experience with it. You definitely need to understand where the range is at if you're going to trade this. So not financial advice, but there are always opportunities in the market. So just be aware of that. As far as the heat map, you see it's pretty well mixed. Energy was strong, lots of money flowing back into energy. Usually it seems like we're seeing that a lot in this market. When money flows out of the general market, it flows into energy. When the market has it oversold in energy, then it flows back out into the market. And we'll talk about bonds as well, but bonds is another area. But HKD says here 311%, but actually that's not totally entirely true. Let's take a look at the chart here. So the low is 45.02, so $45. High today, 280. I know this says 280, but it's 284 was the high of the day. So just a huge jump. And then we pulled back down here to 150. So we almost lost half of today. It almost retraced about 50%. I don't know if this is going to give us more. It's a very risk trade. You did have a few opportunities to get into it, but again, you're taking a lot of risk on. And if you get into that, there's a lot of stops. If your stop's too tight, you're gonna get stopped out. So definitely a gamble trade. That's why I said it's in the casino, not for investing. Definitely not investing for me. But here's the history on this one. This is one we covered when this actually originally rocketed up here back in July here, where it ramped up from $38, kind of got up here to around 444, kind of range bound for a while, jumped back up in, ran to about 1,000, and then boom, $2,300 one day. Now here's the reason why I say don't chase these, and you don't ever know how high it's going to go, because this is crazy amount. But you see this just kind of dropped right off, back all the way back down here to around 180 to 160 to 180. Went flat for a long time and then dropped down here to 45, and that obviously was a trigger for it to make another run here today. So this very well could just come right back here flat again, like it did before back in July and the first part of August. So just be careful if you are trading this one. But this is like those GameStops and those AMCs, and just a rocket ride today. So just want to share that with you. I just think these are interesting, and it's just definitely has taken the meme stock to a whole nother level. The market watch, we talked about this one as well. Be careful with Thursday, Friday. Thursday, we have a lot of data come out: jobless claims, retail sales, import index, business inventories, a lot of things that could possibly swing the market. And then Friday, the most important thing there is options expiration. So we have monthly, quarterly, daily, weekly, All the options are expiring on the same day. So that could create a huge swing in the market. And last few times that we've had this, it seems like what you've seen is because there's so many people short in the market, they had to cover those shorts, and so the market pumped at the end of the week instead of dumping at the end of the week and shorting the market and those shorts winning. Now we did pull down quite a bit from where we're at, so those puts are in a lot better place than they were a week ago. But is it enough, or is the market going to make a decision to either try to dump some more and reward those people who shorted the market, or are they going to pump the market up because they've got to cover the shorts that they have? And we've talked about this one, several times here. So institutions, look at this record number of people shorting the market, of institutions shorting the market right now. Record in history, at least going back to 2000. So that means everybody was expecting to go down, but the S&P 500, has continued to climb. And so that's just something, where, basically you have, big institutions hedging, that the market was going to come down, and it has not. So they've got to cover it a different way. So we'll see if we get a pump. If you look here at the S&P 500, this is the, contracts that we have. So you have red's shorting the market, green is long on the market. Obviously, you can see there's a lot of people short in the market out here. These contracts, this 380, 370, the price is, we have, 135,000 contracts. You come into here at these highs, you have 37,000, 45, 60,000. So these are a lot smaller than right here. You can see here right now about 1.6 people are shorting the market to go long. So just something to be aware of, and to be careful with on this. Max pain right now it's saying it's 405. So we got a ways to get back up there if we're gonna create the pain. And also just remember, inflation increases on September 21st. Now they're talking about doing a 1 full point instead of 3/4. So just be aware of that. If that happens, that's the expectation now. That's what made the market drop. We'll see if that holds, if they hold to that, or if they change their mind. Obviously, inflation right here, you can see the inflation rate continues to be very high. Pull back a little bit, but not a whole lot, not enough. But here's the interesting thing here on the S&P 500. These are all the companies in the S&P 500 who are over their 50-day average, which means they're bullish. And just a couple of weeks ago in August, we hit this high, and it was 92, which is higher than it is in history. 90% of companies were above the 50-day, meaning they were very bullish. But then we talked about this being a high risk, and then we pulled back down here, found support, ran back up here, and we ran up to 70, 69, 58. So look at right here what we talked about, that we could be in for another pullback based just kind of off of history. And sure enough, we pulled all the way back down, and we're back almost down to that support line. Now we haven't broken the support line like what you've seen here, but we're kind of in, this at least a general range, at least this bulk area right here. So we could, get close to bouncing here, but we could come a lot lower as well. But right now, going from 92% companies bullish to now only 35 or 36% of companies bullish, huge change. So it's amazing how quickly it can change the market. So that's why we always tell you, lock in profits as you go on these runs, because you don't know, right now where the market's been bearish, you don't know how far down we're going to go. And if you haven't subscribed, definitely subscribe to our channel, share these videos with others. I would like to continue bringing these to you, and bring you trade ideas. And beyond just our, YouTube video, which is live in the morning, and then recaps at night. We also have a free non-member chat and daily watch list that we post every morning before the market opens, with the prices of what we're trading and what we're looking at before the market even opens. And then we also have our member site as well, where we're doing the same thing, but we are, having live discussions, and you also have some additional services here besides the live trading. You have a training course, a full master course out there. Right now we have about 16 new different types of trade methods or techniques There's hundreds out there. We're just taking the most common ones and training people on them, just so that they have an idea. You can kind of find out which fits your style of trading. And one of the things I've noticed through training others is that everybody has their own style. Even my partner here that trades with me, he has his own style. Others that we're trading with, they kind of have their own style as far as whether they're a breakout trader, whether they like to short the market, whether they're using stocks or options or spreads or all the different types of techniques that they're using. But we cover those so that you can kind of figure out what kind of fits your personality and the way you like to trade. We also have group training, one-on-ones. One of the things that have helped on the one-on-ones is just looking at people's computers, seeing how they're set up, how they're trading, or their phones, and seeing if we can just tweak it a little bit, maybe make it a little bit better, more efficient for them to trade and make more money. Let's get in some charts here. Tesla, again, this one, we talked about this one. I have two trend lines on here. One is the major trend line. The lower one was because we had this pivot right here. Wanted to take into account these two pivots and see where we're going. And you see right now, we tagged it, pulled back, and we tagged it again a second day. So that was resistance before, seeing if it remains resistance, and we pull back. But we are kind of in this wedge here, and we're at the top. So very well could, with this bullish breakout, we could, have a breakout on Tesla and move higher. But I think Tesla is probably looking for the market to kind of help it out and have some momentum. But if the market starts to pull down, we could come down here and break through the bottom part of this. But right now, Tesla is very bullish on the way that it's been moving on the price action. All right, Chipotle. Chipotle came in, got over that high pullback here, back into this range underneath kind of where we were at, sitting here right underneath this resistance line now. So it could become range bound here with Chipotle. It was range bound down more in this zone down here, but we could create a new range here. You can see that we did spend some time in here. But Chipotle, finally pulling back. I mean, it's been just running like crazy here ever since earnings came out. So definitely keep an eye on Chipotle. NVIDIA tagged a new low today, closed at the lows. Just really weak on this one. Semiconductors just been nailed hard. But looking to see if we can get some support here and hopefully run here. But it's in a danger zone right now, going lower. Amazon down here towards the bottom. It didn't get below this candle. So as long as it stays engulfed in this candle, we may chop for a while until we break out above that candle or break below this candle. So just looking to see if we can maintain that. If we get below our support lines here around 21.24, going to have some more downside here. But we're kind of like right in the middle of this wedge right now. So kind of in an indecision mode right now. Netflix consolidating kind of the zone. It's been, has spent like, several weeks here in this zone and just kind of going back and forth to chop. And so we either got to break above this 231 area or below, 215. Apple, they had this big, huge pullback onto the support line, 2 days now, third day kind of tagging it, but it's engulfed in this candle. So we'll see if it just continues to chop. There is kind of a downward sloping wedge here that it could be, break out at some point. Microsoft down here, second day down here, tagged below it, but came up and stayed on our support line. So looking for it to maintain that, might become range bound in this zone before trying to figure out if it's going to break up or break down. 10-year yield. So this, this affects the market as well. So 10-year came, popped up there, tagged the high and came back down. So that's good that it rejected off that. So that's good for stocks because if all the money's flowing to the bonds, that means less into stocks. And you can see here on a 2-year yield though, we tagged a new high, another high. So tagged it, found some resistance, pulled back. So we'll see, can we, pull back here more so that the market can continue to run, or is money going to continue flowing into the bonds? And you can see here, like on currency, so the dollar had this huge flush down, found support, and then today, boom, right back to the top, right up to this top range, and possibly breaking out to new highs. So dollar continue to remain strong. As long as that continues to happen, it's gonna be hard for the market to take off here. Gold, obviously with the dollar up, gold comes back down. It's down to the support line here. looking probably to make new lows here based on where it's at right now. So we'll see if we can get a bounce off the market, but right now, looking pretty weak. The VIX kind of came up here, tagged this resistance line, came back down. It's engulfed in this candle. We want to stay in this range. I really like it below 20 to really be bullish back on the market. So we'll see what happens. On a weekly chart, you can see that it stayed within that zone as well. The support line coming down. So as long as we stay down here below this, the market will continue to run. If we break out of this, then the market's probably going to come back down to the lows again. As the daily chart, so we didn't go quite down the bottom of this candle, got close. And hopefully that'll be support when if it does get there. But we did stay in the candle. So we got a little dragonfly here, doji, whatever you want to call it. But kind of indecision right now. So, does this reverse and go back up? Hard to say, but right now, kind of indecision. On a weekly chart, still above both of these candles. We do not want to drop below these candles or we will probably be coming down. So keeping a close eye on that. On triple Qs, we got the support line up here, at 1, 2, 4 days on this support line here, excuse me. So looking for that to hold and hopefully get a bounce at some point on this wedge. On semiconductors, right here, so we have 1, 2, 3, now 5 days on this support line. More time we spend down here, more likely we could come down from here. So we really got to get a bounce off this the support line here. IWM, so you can see here we kind of pull back here, hit the bottom, came back up, pull back down. We've not come back down to the support line down here. It is holding right on this candle, so it's engulfed in this candle right here. Really got to break above this candle or we're going to break below the candle. So 82 for the bottom side or 84 for the top side of that candle. Financials came down, tagged on the bottom here. Well, let's see, we have 1, 2, 3. So this fourth day, within this range of candles touching this, tagging this bottom. So the more we do that, again, more likely we're to break it. It was support before. It's been support for several days. So looking for a bounce off of here, but right now not looking real good. That's a reversal candle right there on that yellowish tone typically, but it doesn't have to be. I can see here it wasn't for a few candles. And then Bitcoin is in this downward sloping trend. We hit resistance, pulled back, came up, hit resistance with the market the way it is, came back and pulled back here pretty heavily today. So we'll see if we can get support down here, but it's getting tighter. So that means decision points coming up here for one direction or the other. And so who knows what this weekend's going to be like on trading cryptos, where it's at right now. Ethereum, same thing. Found resistance, came down, found support, went back up, was resisted, came back down here. Now 2 days on this support line. So if we continue to get downward pressure, we could break this and start to come down lower on Ethereum. And Luna Classic, we talked about this one. So we hit the highs, pulling back here, got to the 20-day. Now we broke the 20. We're at the bottom of this upward sloping line. If we don't break up here, then obviously we're coming back down lower towards the 50-day. So that's going to retrace and take out a lot of this money. So hopefully whoever has Luna Classic took a little profit off, wait for it to settle out and then get back in if you're going to, or pick something else. So that's our stocks, our cryptos, small caps, things that we're looking at trading. Look for, definitely join our Discord. Look for our watch list in the morning and be safe trading out there right now. The market is choppy. The market's still trying to find direction. And obviously the bulls are not in control because they've been rejected a few times now. And obviously that rejection could continue on. This could be a very choppy week. If we have good news though, could see a little bit of at least a recover or retracement of this downfall yesterday. So stay safe out there. Watch those highs and lows. Watch the open, and we'll talk tomorrow night. See how your trading went, and get a game plan for the next day. Everybody have a great night.